Today, Thursday, April 30th, 2026, was a historic day for the U.S. stock market as the major indices closed out their best month since 2020. Despite the wall of worry surrounding Middle East tensions, the market leaned heavily on blockbuster corporate earnings and well-behaved inflation data to push the S&P 500 and Nasdaq to new all-time record highs. Market performance, close, April 30th, 2026, S&P 500, 7,209.01, plus 1.02%, new record high. Nasdaq Composite, 24,892.31, plus 0.89%, new record high. Dow Jones Industrial Average, 49,652.14, plus 1.62%, the big tech divergence and Apple's record. The market today was a tale of two AI strategies. Apple, AAPL. Reporting just after the bell, Apple posted its best March quarter ever with $111.2 billion in revenue and a $100 billion share buyback authorization. While iPhone sales, $57 billion, slightly missed estimates due to chip constraints, services revenue hit an all-time high. The stock traded volatilely after hours, initially dipping 1% before surging over 3% as investors digested the massive buyback and dividend increase. Alphabet, GOOGL, rallied 10% today, acting as the primary engine for the Nasdaq. Its 63% growth in Google Cloud revenue convinced investors that its $185 billion AI CapEx plan is already paying off. The CapEx casualty. Meta plunged nearly 9% and Microsoft slipped 4%. Even though both beat earnings, Wall Street is punishing companies that show massive spending on AI without the immediate bottom-line growth seen at Alphabet.
2. Economic data, the Goldilocks PCE report. The most critical data point today was the Personal Consumption Expenditures, PCE, price index, the Fed's preferred inflation gauge. Inflation, March PCE rose 3.5% year-over-year, exactly in line with expectations. Core PCE rose 0.3% month-over-month, also matching estimates. GDP, Q1 GDP came in at 2%, slightly softer than the 2.3% estimate. Market impact, the combination of in-line inflation and slightly softer growth suggests the Fed will stay on hold rather than hiking further, which sent Treasury yields lower and fueled the rally in equities.
3. Geopolitics, Operation Epic Fury update. On the final day of the original 60-day War Powers Act window, the Trump administration officially argued that the war in Iran is terminated due to the indefinite ceasefire extension. The blockade. President Trump confirmed today that the naval blockade of Iranian ports will remain until a real deal is reached regarding nuclear constraints. Oil prices. Oil remains the primary risk factor, settling near $110 to $126 per barrel, depending on the grade. While prices slipped slightly today on news of the war's termination, the Strait of Hormuz remains a major supply bottleneck that continues to feed the pessimism Tom Lee mentions. Ford, notable sector moves. Caterpillar, CAT, surged 10%, almost single-handedly driving the Dow's 790-point gain. The company is benefiting from a record backlog driven by the AI data center construction boom. Eli Lilly jumped 7% after raising its full-year guidance on the back of explosive sales for its obesity and diabetes treatments. Ford dropped 5% as higher labor and transition costs overshadowed a profit beat. Strategy alignment, the M-shaped roadmap. Today's record close marks the end of a 10% monthly gain for the S&P 500. This fits the first peak of Tom Lee's 2026 forecast. However, analysts are noting that the jagged summer correction could begin as early as next week, as the market pivots from earnings euphoria to the actual economic friction of the new tariffs and the reality of prolonged energy costs.